G'day, my name is Earl Stein. I'm from Draftworks, and what we're going to be doing today is explaining retained income. Now, some of you may ask, why am I explaining such a topic? Well, simply because we've noticed a marked increase in support requests that actually relate directly to retained income. We want to improve your productivity, and simply now I'm going to go through it step by step, explain what it is. This is ideally suited for first-year clerks or for anybody that has now come across retained income and you don't exactly understand what it is. We've all been there. No matter where you are sitting right now, if you're a partner in a firm, at some point in time, you did not understand retained income. So I'm going to try and explain it as simply as possible. And if you do have any queries, please, you're welcome to email us or continue with the support request. But we just want to try and increase your productivity. Basically, right now we're experiencing about 40% of our support requests are related directly to retained income. And it's very sad when we have to say, sorry, we can't help you. Because unfortunately we can't. It goes back to your accounting system, not Draftworks. And we're just going to explain why. And then, of course, hopefully, it's going to make your life easier. Okay. Now, currently I'm in Draftworks. And let's have a look here. I have got a TV open called Trial Balance for right retained income. Okay, a little bit later, I'm going to open up Trial Balance for wrong retained income. And we can see where things are, where they go wrong, and how you can fix them. Now, let's have a look. I have 3 years of my TV. First year of trade, second year of trade, third year of trade, sales, expenses. And of course, you already know that since I've had 100 Rand in sales, only 50 Rand in expenses, I'm sitting with a 50 Rand profit. Okay. Below, we've got retained income. We'll get back to that now. And of course, bank. Why do we have bank? Well, we received 100 Rand in. We've only paid 50 Rand out. So, of course, I'm going to bank the rest. Now, that doesn't have to be bank. That could be debtors, cash on hand, whichever. Okay. But that's a trivial matter. What we're really interested in is this account, retained income. Now, I think why a lot of people battle with retained income is they actually don't just understand what it is. Put it in the simplest forms, and of course, I do know retained income does get a lot more complex. Share buybacks, transfer to the reserves. We're not going to focus on that. We just want to simply get the basics right. If you are dealing with that, then I assume you are at a senior level, and you do, of course, understand how equity works. So let's have a look. Retained income is simply the cumulative total of profit or loss over the years. That's really all it is. Did I make a profit last year, the year before that a loss? We're just adding them up all together. That is as simple as it is. So let's have a look at my TV. So I've got a first year of trade. Okay. Now, what is my cumulative total of profit or loss in the previous years? Well, there is none, simply because it's my first year of trade. We weren't open in 2010. Therefore, I cannot bring in the brought forward balance of all my previous year's trade. And that's exactly why retained income is sitting at zero. Okay. No retained income for my first year of trade. And this is actually how we do our formulas in Draftworks. So the formula that I built in tries and picks up if there is retained income. If it isn't retained income, it assumes that it's your first year of trade, and then it will take your shares into contributions. We'll have a look at that a little bit later. Okay. Now, in our first year of trade, again, income, expenses, income less expenses, we've made 50 Rand profit. Okay, fantastic. Now, where does that 50 Rand go? Well, that goes into the cumulative total of profit or loss over the years. But that 50 Rand goes into the next year because retained income always looks at the previous years. Okay. Now, this is a raw TV. So we had 50 Rand profit in our first year of trade, 2011. So in my second year, I would have 50 Rand sitting in credit, of course, because it's a profit. Just remember your basics about equity. 50 Rand directly relates to the previous year. Okay. So in my 2012, we had 100 Rand sales, we had 0 expenses. So we know 100 Rand, 0 expenses, 100 Rand profit. Okay. And of course, because we started off bank with 50 Rand before, we added on another 100. We now have 150 Rand in bank. But we have our cumulative total profit loss over the years. And that's what retained income is. Let's have a look at it in my third year, so we see how this is building up. Third year, and the business hasn't grown, we still made 100 Rand sales, 50 Rand expenses this year. Okay, so 150. Okay, oops, I've got to put that in. So we have a profit of 50 Rand. But what is my retained income? Well, again, back to the cumulative total of profit loss over the years. First year, I made a 50 Rand profit. Second year, I made a 100 Rand profit. So therefore, A plus B, 50 plus 100, my retained income will now be 150 Rand. And you can see how our trial balance is balancing. Perfect. Okay. So whenever you get stuck, just think about the cumulative total of profit or loss. Very importantly, I think also the other second biggest mistake is that people assume that the retained income for the current year includes the profit of the current year too. It doesn't. Okay. Remember, if we look at your equity statement, and let me jump into my financials now, you can actually look at how our equity is done. Okay. Right now, these are the things that you're looking for. Balance sheet is in balance, retained income is in balance, and these are what these warnings are. If I go through to my balance sheet, right now we see that in 2012, I had 150 Rand, okay, as my retained income. But let's go back to my TV. 2012, how did it get to 150 Rand? Well, very simply, I may have only started out with 50 Rand, but the profit for the year was an extra 100. So that's why my actual retained income at the end of the year is 150. And that's correct. Now, for more of a drill down, let's have a look at my equity. And in equity, we're going to see there's my retained earnings, balance at 1st of March. I made 100 Rand profit. Okay. So let's go back to my right TB. I had 50 Rand starting out that you just saw. And then I made 100 Rand profit. Where did that 100 Rand come from? Well, it came from my income statement. So we had an opening balance. Remember, cumulative, again, this is from my prior year. What was my prior year profit? Cumulative profit or loss was 50 Rand plus the 100 Rand that we made in 2012 profit. Go back to my equity, and there's the 100 Rand. Okay, that's my total comprehensive income for the year. If we go to the total, the balance at the end of my prior year, we'll see 150, and that directly goes to my balance sheet for my retained earnings. Let's have a look at the next year. Okay, so again, cumulative total in 2013 in my TV. What should that retained income be? Well, it'll be the cumulative total of the profits of the previous year, which was 50 plus 100, 150. Okay. Now, did you notice how that 150 in my third year agrees to the closing in my second year for my equity? That's how we can check whether your opening balances are right or wrong. This figure that's in 2012 should be in my TB in 2013, okay? Because it's the cumulative of all the prior years, excluding the current year. So go back to my TB, and the 150 Rand that was from my closing in second is now in my opening in third. You know it's then right. I hope you followed this. Let's just go back and have a look more at the equity statement. Now, we made 100 Rand. Okay, So if we go back to equity, we start off with 150 Rand at the end of my 2012 year, and this figure is now sitting in my 2013 year in my TV, which is right. We go and we have a look at equity. So we start out with 150 Rand, but remember in 2013, we only made a 50 Rand profit. So 150 Rand plus a 50 Rand profit we made this year. There it is. It's me 200 Rand, which goes again to my balance sheet, my retained earnings. That's a very summarized way how equity works. I'm not getting into the details behind exactly why. However, from this, you'll just take through how it should look like. Okay. Now, remember, if you open up the financials in Draftworks and this errors, this shows that there is no difference. Okay. And it's out by 50 Rand. We then know that there was an error in the prior year. Now, the big thing is, how did that error occur? And a lot of people don't understand that as well. Okay. A number of reasons. I'm going to probably go over the biggest reason now is there were not proper controls over the accounting system. And by controls, I mean something wasn't processed into the 2012 year that should have been, as an example. And again, now we're looking at the trial balance for the wrong retained income. Exact layout as before. First year of trade, 100 Rand sales, 50 Rand expenses, which gives me a profit of 50 Rand. Now, if we look back at my previous TV, let's just grab it quickly. There we go. It's sitting up there. Let me just bring it up to my screen. There we go. If we look at previous Right TV, this profit was taken as my retained income, again cumulative, into my second year. However, when we worked out the profit this year, we noticed that in my second year, the accountant has given me a trial balance that has 100 Rand as retained income. Why would that occur? Well, that would only have occurred if the 50 Rand wasn't included. So if we take off the 50 Rand, we'll get back to the 100 Rand profit. 100 Rand sales, 100 Rand profit. The accountant never took into account the journal that we raised to correct the trial balance. So this 50 Rand was not included. That's how they are sitting with 100 Rand. Now, the problem is when we open up our financials, it's immediately going to tell us our retained income is wrong. Because our previous year trial balance said that we had a profit of 50 Rand, and it then works out, okay, we had a profit of 50 Rand. The previous years, and again, this is first year of trade, the previous years were all zero, so we're not going to add all those profit and losses together, and it compares it to what's sitting in my trial balance for 2012. And it compares probably all the previous years with 50 Rand, but 2012 is now saying there's 100 Rand. So there's something wrong. This is the way you identify. And one of the easier ways, identify if all your previous transactions have been taken into account. You'll hear things such as an opening balance test. An opening balance test is simply where you take last year's trial balance that's been signed off, that was incorporated in your financials. So basically the figures that went into your final financials are then compared against your opening GL for the balance sheet for the next year. And you can just do a simple minus between the two. That's also a quick way, and it's actually probably the best way every single time to do that, just to determine that all the entries were processed into the accounting system. Now, a lot of people try and force equity, and they do come across our lockdown on equity statement, and that's exactly why we lock it down. You should never ever try and force balance equity, because that's telling you that there is something that is not complete in the year that you're busy doing. If your retained income is out, and of course accounting with the double entry method. Because one account is out, there's going to be another account that's out. And remember about financials, it's all about presentation. Okay, and what happens if that is a material amount? It can get very hairy, but just to again, let's step back and go back to the basics. Okay, so in my wrong TV, I'm now sitting with 100 rand profit, where it should have been 50. Then no, there's an opening balance issue. And this will also roll forward into my next year. Because my first year of trade, because that entry did not make it into the opening balance of 2012. 2012 is still wrong, and that wrong figure is going to go forward into 2013. Again, we made, this is the proper figure, we made a 50 Rand profit, plus the 100 Rand profit that we made in 2012. So my third year should be saying 150 Rand. But instead, because this retained income is incorrect, it's going, okay, my previous year profit plus the current profit is actually 200. Okay, so we've got my 100 plus what my profit should have been. Well, that's incorrect anyway. So 100 plus 100 is 200. It should have been 100 Rand profit plus the previous year's profit of 50, which should have given us 150, not 200. So you see how the error is now going forward into my 2013 year. Okay. Now again, this is the wrong way. Just concentrate on the right way and how it should be, and then you'll determine, of course, whether it is wrong or not. So just to highlight again, retained income, cumulative total of profit loss over the years. First year of trade will always be 0 because we have no previous year's cumulative total profit or loss. In my second year of trade, we'll take all the previous year's cumulative profit or loss, and it will be in my trial balance. This is not the figure that you'll however see on your balance sheet. This will be retained income from the previous years plus the profit or loss you've made this year. It is very easy once you understand that to quickly look at your equity statement and see exactly what's right or wrong. This is the number one item. It's always the go-to for us, just to double check if a support request comes in, whether it is correct or incorrect. Okay. Of course, the status sheet tells you immediately, but it's always nice just to double check, and this allows you to follow it. Okay. So remember, 50 Rand in my 2012 was the cumulative total from 2011, plus I made a profit in the current year, which will give me my closing retained income. Now, again, while the equity statement is so good to look at, you can immediately see how we take 150 Rand into the opening balance of the next year. So this 150 should agree to my trial balance for the next year, which we have there, 150. I hope this helps. I have tried to cover quite a little bit. Please let me have feedback. You can email earl@dataprime.co.za. Let me know if there's another way you'd like to explain it. It's very easy, and of course, it's only easy when you know how. So please let us know. If there's anything else we can assist you with, please contact support. We're always here to help. Hope everybody has a lovely day. Thanks for your time.